What if I told you that one man predicted every major financial crisis for the past 40 years while making billions in the process? Ray Dalio went from being dead broke, borrowing money just to survive, to running the most powerful hedge fund in the world. How? He cracked the code of the financial markets with a set of powerful investing principles that can work for anyone, rich or not. These are the exact rules he used to build a $160 billion empire, navigate economic crashes, and outsmart the smartest investors on Wall Street. Ignore them, and you'll keep making the same money mistakes forever. But learn them, and you'll never look at investing the same way again. Ray Dalio wasn't born into wealth. He didn't have connections to the financial elite. In fact, he grew up in a typical middle-class home in Queens, New York. But today, he's the founder of Bridgewater Associates, the world's largest hedge fund, managing over $160 billion. So how did he go from an average kid to a billionaire investor? Let's rewind to where it all began. Dalio's father was a jazz musician and his mother a homemaker. Money wasn't a big topic in the household, but Dalio had something most kids didn't: curiosity and a willingness to take risks. His journey into investing started at just 12 years old, when he worked as a golf caddy at a local country club. But this wasn't just any golf course. This was where Wall Street professionals played. One day, Dalio overheard some wealthy investors talking about the stock market. That sparked an idea. He took the $300 he had saved from caddying and bought shares of Northeast Airlines. He had no fancy strategy, no deep analysis, just a hunch. But luck was on his side. Northeast Airlines soon merged with another company, and his investment tripled. That's when he realized the stock market wasn't just for the rich. Anyone could make money if they understood how it worked. This small win fueled his passion for investing. In high school, while other kids were focused on sports and parties, Dalio was obsessed with the markets. He read everything he could get his hands on, studied historical trends, and even started trading more stocks. By the time he got to college, he was already managing money for his friends. But his real education came from mistakes. He learned early that the market wasn't just about lucky picks. It was about understanding economic cycles, managing risk, and controlling emotions. He lost money, he made money, but most importantly, he learned. After earning an MBA from Harvard Business School, he landed a job on Wall Street, but he wasn't content working for someone else. In 1975, from a small two-bedroom apartment in New York, he launched Bridgewater Associates. No fancy office, no big investors, just Dalio, a phone, and an unwavering belief that if he could understand how the economy worked, he could predict the markets better than anyone. His big break came when McDonald's hired him to manage their pension fund. It was a game changer. With every successful trade, his reputation grew. He didn't just make predictions, he backed them with data, deep analysis, and historical research. But Dalio's journey wasn't smooth. He made one massive mistake in the early 1980s. He bet big on a market collapse that never happened. It wiped him out. It was his lowest moment. He lost nearly everything. He had to lay off employees, borrow $4,000 just to pay the bills. But instead of quitting, he did something radical. He restructured how Bridgewater operated and developed a system that would change everything. One of Ray Dalio's greatest contributions to the investment world is his legendary all-weather portfolio. This strategy is designed to survive and thrive in any economic condition: booms, recessions, inflation, or even market crashes. But what makes it so powerful? Dalio spent decades studying economic cycles, testing data across hundreds of years, and identifying patterns that dictate the movement of markets. And through all that research, he discovered one fundamental truth: no one can predict the future. Instead of betting everything on what might happen, Dalio created a portfolio that performs well no matter what happens. So, how does the all-weather portfolio work? Simple. It's built on the principle of diversification, but not just any diversification. Dalio realized that most investors diversify the wrong way. They spread their money across different stocks, thinking they're protected. But when the market crashes, all their stocks fall together. Dalio took a different approach. He diversified across asset classes that react differently to economic changes: stocks, bonds, commodities, and gold. They don't all move in the same direction at the same time. Some thrive in inflation, some in deflation, some in growth, and some in decline. This is what makes the strategy all-weather. It's prepared for every possible market scenario. So, what does the all-weather portfolio actually look like? Here's a simple version of the allocation Dalio suggests. 30% stocks for growth during economic expansions. 40% long-term bonds to provide stability when the stock market crashes. 15% intermediate-term bonds to create additional balance. 7.5% gold, a hedge against inflation and currency devaluation. 7.5% commodities, protection during times of rising inflation. Each asset plays a specific role, ensuring that no matter what happens in the economy, the portfolio stays resilient. During bull markets, stocks grow. During recessions, bonds stabilize the portfolio. During inflationary periods, gold and commodities rise in value. The result? Smoother returns with lower risk. Dalio once said, "He who lives by the crystal ball will eat shattered glass." Instead of guessing, he built a strategy that lets you win regardless of the economic climate. And here's the most shocking part. This strategy isn't just for billionaires. Anyone can implement it. Dalio's research shows that the all-weather portfolio has historically outperformed most investors over the long run with far less risk. Imagine if you had followed this strategy before the 2008 financial crisis, the 2020 crash, or any other major downturn. You wouldn't just have survived, you would have thrived. Most people panic during downturns. But Dalio, he sleeps soundly at night, knowing his portfolio is designed to handle anything. And that's a lesson for every investor. Don't predict, prepare. Instead of hoping for the best, build a strategy that can handle the worst. Because in investing, it's not about avoiding storms, it's about having the right umbrella. Ray Dalio didn't just build a hedge fund. He built a system, a mindset, a way of thinking that anyone can apply to their own life. So what can you learn from Dalio? First, embrace reality even when it's uncomfortable. Dalio believes that truth is the foundation of success. The faster you confront the truth about your finances, your mistakes, your weaknesses, the faster you can improve. He calls this radical transparency, a brutal honesty with yourself and others that forces growth. Second, think in probabilities, not certainties. The reason Dalio is one of the greatest investors of all time is because he doesn't assume he's always right. He calculates risks, weighs different outcomes, and always prepares for multiple scenarios. That's how he predicted the 2008 financial crisis when most experts were blind to it. Third, systematize your decision-making. Dalio doesn't rely on gut feelings. He builds principles, clear, tested rules that guide every decision he makes. At Bridgewater, these principles are so well-defined that decisions can be made with algorithms, not emotions. If you want to think like Dalio, create your own principles, rules for how you invest, work, and live. And finally, never stop learning. Dalio reads constantly, studies history, and listens to people who disagree with him. He believes that ego is the enemy of growth. If you want to build wealth, build wisdom first. So ask yourself, what are your principles? Are you brutally honest about your mistakes? Are you preparing for different financial scenarios? These are the lessons Dalio mastered, and if you apply them, you'll start making smarter decisions, not just in investing, but in every part of life. Now that you know how Ray Dalio built his fortune, here's something you need to know. Most investors fail. They lose money, make bad decisions, and never reach financial freedom. But why? And how can you avoid their mistakes? In my next video, I'll reveal the biggest investing traps that even smart people fall into, and how you can be in the top 1% of investors. Click here to watch now.